Hey traders, checking in on the S&P 500 and the broader market. We saw the bulls carry through the momentum to end last week to begin this week as well, with some daily trend changes taking place. That tells us we need to now zoom out and determine what is the most likely scenario from here. And a shout out to all the spouses out there who are forced to listen to me on a daily basis. This one goes out to you. Hello, and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking on the stock market today, we've got SPY with follow-through, breaking the daily lower highs. We are not in a daily uptrend because this move is coming straight off the low. That's the case for a lot of sectors. It's not the case for QQQ and some tech names. So we know that if we're going to get follow-through from here, we will have to see this bounce top out, a higher low form compared to 319.80, and then follow-through confirming the daily trend change. There are a lot of individual names, SPY included, where we are looking for a weekly lower high to be the most likely scenario on this bounce. And I'm talking the vast majority of individual tech names, QQQ, Amazon, Apple, Facebook, Netflix, you get the idea. And a factor in that is not only the size of the pullback that we have seen, but also what is approaching. We have earnings leading straight into the election. And we know there's going to be volatility with the election, going to put together some kind of spreadsheet, no, wrong word, some kind of game plan as to what to anticipate, whether Trump wins or whether Biden wins, and which sectors are going to be easy bulls or easy bears, depending on that scenario. But one thing we know for sure is volatility is coming because the market does not have the confidence to accurately price in who the winner is going to be. It's too close for the market to be able to do that. So again, the most likely scenario on the weekly time frame, in my opinion, is a lower high compared to 358.75. And I would not be surprised to see this tightening range remain on the weekly time frame as we head into and through October. And the question from here will be, can the bulls confirm a daily trend change on SPY? IWM, significant bounce. That tells us without even looking that the healthcare and financial sector have now started to participate significantly in this bounce. Anything under 155.29 is just a daily lower high, and we know a daily trend change will be needed, just like SPY, if we're going to see follow-through. Zoom out, bigger picture, weekly time frame, we've got a couple lower highs of resistances, so not expecting the bulls to take back over the weekly time frame anytime soon. First things first, daily trend change has to take place. QQQ has changed the daily trend. Low, high, higher, low, bull break this morning. Next resistances are 284.85, 282.20. Closed up near the high of the day. And when we lose the hourly uptrend, we know daily consolidation is underway from there. And anything above 261.22 will be a daily higher low. Zoom out, weekly time frame. Anything under 303.50 is a weekly lower high. That is roughly 10% from where we stand, keeping in mind that we've already bounced roughly 5%. So I anticipate the most likely scenario is a weekly lower high and tightening range through October into the election. Healthcare, solid bounce day today. Bit of an upper wick of profit taking. If we were to break 103.75, the low of today, tomorrow, our daily lower high will quickly be set. It's then up to the bulls to confirm a daily trend change if we are going to believe that this bounce has followed through. Very similar weekly chart to IWM. We're not going to change this weekly trend anytime soon. Daily trend has to change first. Financial sector had the most notably bullish day that we've seen in weeks, but we're just looking for a daily lower high. When we lose the hourly uptrend, that daily lower high is likely set, and we then have to come down and hold 22.94 and then follow through to change the daily trend change, keeping in mind that we will just be looking for a weekly lower high as well. Biotech sector, we're watching for a tightening daily range. I'm viewing this as essentially our last little daily higher low was 103.20, so low, high, higher, low, scouting a lower high compared to 166.64 and looking for this daily equilibrium to tighten up through this week. The question we have into tomorrow is, has our daily lower high been set? And if we were to lose the hourly uptrend, we would then say yes, but the hourly uptrend is still intact at this point, so we can't say that just yet. But a nice wide range that we expect to tighten up. SMH, Semiconductors, 174.74 key resistance. Very similar chart to QQQ. The difference is we held support. At this point in time, QQQ just kept getting these little lower lows with no follow through. And the difference is we held support here. And we had a nice 4-hour pattern for the NVDA bulls, which broke bullish first. And then SMH is now following, a little bit of a laggard. And if we get over 174.74, we're looking right back up at the all-time high. As far as the weekly time frame, we are closer to the all-time high here on SMH than we are on, say, QQQ. So probability-wise, it's more likely that the SMH bulls will be able to get back to that high, whereas I'm more confident looking for a lower high on QQQ, which still needs, this is 6.5% to all-time high, whereas QQQ would need more like 10%. Pretty notable difference. But SMH bulls keeping their control and not losing these higher lows once that initial fear bottom was hit. If we do reject from 174.74, condense it to the 2-day time frame, it's going to be in equilibrium. But that key resistance test is coming tomorrow. And the VIX is getting very unclear on the daily time frame. Choppy. We had a high, a low, lower high, bear break with zero follow through. So pretty much whenever I see choppy range, I look at the extremes of that range as the most important levels. 24.80 is a double low, and make that 31.20 is the highest price we've seen here in a while. So those are the most important levels for me. And if 24.80 were to break, we could say that we are now confirming a weekly downtrend with a lower high and lower low. So bigger picture, bulls got their follow through. Back on Thursday, we were looking for a confirmed hourly trend change to set daily higher lows. We got it. As soon as we got the confirmed daily higher lows, we looked for the daily trend change. We got it in QQQ and all of our tech sector names. And now the question is, are we going to form weekly lower highs, as I anticipate is the most likely scenario? The dollar. So asset bulls are liking where they stand relative to the dollar. I've given some analogies last week, but essentially it is the worst of the shift being over when the daily trend change confirmed. Now we're seeing a notable bounce, 3 days of a bounce in stocks. We're seeing cryptocurrencies hold up really well, and we're only just starting to see the potential of daily consolidation. So it's essentially our asset bulls started to shake off fear before the dollar consolidated. It's almost like they're less scared of the dollar. Okay, we've seen it now. The boogeyman's out, and it's not as scary as it was on our initial reaction. So DXY, 4-hour, did confirm a loss of the uptrend and no follow through at the moment. Could this be a daily bull flag? That's possible. If 94.15, the low of current consolidation, were to break, the odds of a daily bull flag would decrease, but we still have tons of space for a daily higher low to form. Gold finally getting a bounce going. So inside bar actually broke bearish, but we double bottomed at 1848. So double bottom at 1848, we broke 4-hour resistance, and now we zoom out with tons of space for a daily lower high to form. An aggressive bull is already in. They were scaling into weakness. A patient bull is waiting for this bounce, knowing it's just going to give us a lower high, and they're going to look to enter on the higher low and use the low as our stop. Amazon bulls did that last week, and it worked out very well. So if I'm a patient bull, I'm saying, do your worst, bulls. Bounce as much as you can. I don't care if I'm not on board, because I will get on at the next stop if this bounce is big enough that I have interest in getting on at the next stop. If that is as much bounce as we see, that's a daily bear flag. I don't want to try and make an entry. So the patient bull is waiting for more information as to the size of the bounce, and they don't care about missing the initial bounce, knowing that a daily trend change will be needed in order for follow through. Same thing with silver. Pretty much everything that I just said applies to silver as well. Miners, daily bounce underway. Same thing here. Tons of space for a daily lower high, but we're starting to create enough space for a higher low to form once we top out. It will then be up to the bulls to hold 37.08, and we would then have to confirm the daily trend change for a notable shift in momentum. So as far as the metals, the miners, and healthcare and Financial sector and IWM, as far as all of them are concerned, it's just a daily bounce looking for a lower high, and further proof will be needed in confirmed daily trend changes. The tech sector and QQQ are one step ahead of the game for the bulls, having already done so. Oil is in a sideways range. So the levels I care about on oil are 38.87 support and 41.72 resistance. If you want to condense it down to the 2-day time frame, it's a bit more clear. I like the 2-day time frame for Bitcoin. There's a lot of charts. Tesla, I like the 2-day time frame just as being a bit more condensed and clear. So higher low is set at 38.87, and we're now watching oil for a lower high compared to 41.72. If that lower high forms, then we could stay in this range all week. Natural gas trying for a daily bull flag. 4-hour confirmed downtrend with 0 follow through means zoom out and look for the potential of a flag. If the bulls can break 219, little daily bull flag will be confirmed, and we will then zoom out and look for a weekly lower high, anything under 264, with a lot of space for that weekly lower high to form. So that's where we stand overall. I didn't have a whole lot of clarity this morning. I knew what to expect. I knew to be watching for consolidation on the gap up open. I knew that that consolidation would likely just lead to hourly higher lows, so I knew not to be aggressive as a bear. So I wasn't very comfortable. I wasn't really feeling the flow, and I ended up going 3 for 3 on trades today, but with just smaller position sizes because I lacked the confidence that I have on any given day. So those 3 wins ended up just being quarter day maker, third of a day maker, and it ended up being a solid day, but just different in how I approached the day. The bigger win ended up being INO, and this is an example of a trade. Nope, NIO. This is an example of a trade where I was not watching this ticker at all, and I have not traded. I've maybe traded NIO a handful of times in the last few months. Certainly not common for me to trade it at all. But a member posted about it and asked a question, and I pulled up the chart, and I said, I know that pattern. Doesn't matter if I'm not comfortable and confident with this stock. Doesn't matter how I feel about my trading day right now. I know this pattern. I have traded it dozens and dozens and dozens of times, and I've seen it even more times than I've traded it. It is a falling wedge. There are bear breaks of the low of the day with a lack of any follow through, and it was this combined with then zooming out. Okay, I know we're seeing a falling wedge. What is the bigger picture telling me? And the hourly chart said, look for an hourly higher low to form, because anything above 1796 from Friday is an hourly higher low. So even though we consolidated all morning, it's still an hourly uptrend. If I looked at this hourly chart and we were in an hourly downtrend, I probably wouldn't have taken this trade. But it's having the confidence of knowing the most likely scenario on the longer term time frame and then seeing the shorter term pattern align with that most likely scenario that I ended up comfortable taking that trade. So I looked at it right around here, and I said, wow, look at that great visual guide of the 12-period exponential resistance rejecting every bounce attempt. I then saw this bounce attempt, and I said, all right, that's good enough for me. I'm going to make an attempt at an entry. On this 5-minute consolidation, I entered at 1848, and I put my stop at 1838, ensuring that if we broke the low of the day by 3 pennies, 4 pennies, I wouldn't get stopped out. If we broke it convincingly, I would have gotten stopped out. So fortunately, that was the low of the day, didn't get stopped out. Exited half of the position at 1865, and then exited the second half of the position at 1888 or so, heading into the end of the day. So a solid little win. And the point is, when you have enough experience and confidence, I had 0 preparation for this trade. The only preparation that I had for this trade was years of experience. As far as in the moment preparation, saw the chart, saw the setup, looked at the hourly time frame, and in less than 200 seconds, I had the game plan all established as to the trade that I was willing to take on a small risk that the bears were getting exhausted and that we were going to see an hourly higher low form soon. So, moral of the story is keep with your homework, keep looking at charts, because that experience is invaluable. You cannot teach that, and you get it after years, and it helps you significantly to continue performing well. Do good things. We'll see you tomorrow. Have a good rest of your day. Rainy day grooming. We're peeking on the yellow flowers. Cabbage and broccoli and cauliflower planted a few weeks ago are definitely doing way better than in the spring in terms of their ability to outgrow the pests. Gonna plant some garlic. I guess we'll use the potato bed for garlic in a couple weeks. Big bean check-in. Got a butterfly chrysalis on a rotting sunflower stalk, but that leaf is gonna fall fairly soon. Curious if this is supposed to hatch after the winter or what.